To other story now, Ajay Kaul's decision to quit as the whole-time director and the CEO of Jubilant Foods has caused some indigestion on the street. The stock today dropped over 7% as the end to Kaul's 11-year stint at the company marks the second high-level exit in the last 6 months alone. CNBT TV 18's Mangalam Malu brings us more details.
By all accounts, Ajay Kaul has had a deep impact on Jubilant Foodworks' growth story over the last 11 years. He was responsible for setting up the 30-minute delivery system and the supply chain that formed the backbone of Domino's India's growth and making the brand a household name. However, that's not the only reason his exit has been tough for the market to digest. It's the circumstances under which Kaul has decided to step down. Jubilant's quarterly performance has been dismal, with both first quarter revenue as well as margins coming in at their lowest levels since the company's IPO in early 2010. Same-store sales growth has also dropped to a 7-quarter low, and for investors, earnings per share has been dwindling steadily for the last 4 years.
I think the timing of it is a bit disconcerting, to be very honest, because it comes on the back of a negative SSG growth that hasn't been seen since the second quarter of FY15.
Ajay Kaul's greatest contribution in this business has been, developing this supply chain.
What's rattled the street further is that this is the second high-level exit from the company in 6 months. CFO Ravi Gupta resigned in May this year. Plus, the tough operating environment that has plagued the company is expected to remain in effect for short to medium term. From a tougher competitive environment to pricing pressures amid rising input costs to a growing challenge from e-delivery players like Swiggy as well as Scootzy. However, analysts are split down the middle when it comes to the company's valuations and the long-term story.
I don't see it doing more than a 25 rupee EPS next year, and that is if it manages to go from 16, 17 to 25, which is a huge EPS jump. I'm not sure the street will want to give it more than 30p at this point in time.
FY17, we don't see any material improvement in the earnings, so we are largely looking at a flattish kind of a number. FY18, we could be looking at in the range of around 20 to 24 rupees.
I expect Q2 same-store growth to revive. I think near term there could be some negatives, but most of the negatives are now getting factored in, so long-term story remains very good.
As things stand, Ajay Kaul will continue as the CEO till the end of FY17, and that means that if the next appointment is quick, Kaul's successor will have some time to come to grips with the situation and get the oven fires roaring again. In Mumbai, Mangalam Malu.
While the brokerages have clearly sounded the warning bell on Ajay Kaul's exit, here's what the company had to say, and I quote, "We would like to reiterate that Jubilant Foodworks is a professionally managed firm and will continue to pursue its well-defined objectives. His announcement just after the quarterly results is purely coincidental and there is absolutely no correlation between the two." End quote.